Hello, everybody. Welcome to week 15 of tax season. Only 4 more weeks ago. Just a reminder that May 17th is the new deadline for getting your taxes turned in this year, so just make sure you're staying on top of it. Today, we're going to talk about itemizations as a quick refresher on what that means. Many of you are familiar with the concept of a standard deduction. For example, a married filing jointly couple will receive a $24,800 standard deduction, which basically decreases your taxable income by that amount. So essentially, $24,800 of our income is not going to be taxed no matter what on a married filing jointly return. However, we do have the option of also itemizing certain tax deductible expenses. So things like medical health insurance, long-term care premiums, medical expenses that aren't covered by insurance, mortgage interest, state and local taxes, the list goes on. So what we do is we take those expenses, we compile them and add them all up, and then decide whether or not they actually help you, meaning they beat the standard deduction. So for example, if I add all of those expenses up for somebody on something called a Schedule A of their 1040, and it comes out to $30,000, that's a better deduction for them than the standard deduction, the $24,800. So we have some choices. Now, here is where I have a bone to pick with all of those box tax stores that pop up all over the place during tax season and actually have a few established areas. They continually tell people that it's not worth trying to itemize. I don't know why they are telling people this, but it is always worth trying. It doesn't take that much time. And even if it doesn't help you on your federal tax return, it may very well help you on your state tax return and save you hundreds of dollars, because state tax returns also have the ability in many cases to choose either the standard deduction or the itemized deduction. So I have seen this happen time and time again, and I started to take a poll. Well, why didn't you itemize? Well, so-and-so over at this tax store told me that just wasn't really worth it because I wasn't ever going to beat the standard deduction. Well, that was true on the federal side, but it totally beat the state side, and it would have saved you $1,000 in taxes. It just makes me so mad sometimes that this is happening. You know, I get that they're going to charge extra for Schedule A or an itemization. I get that. I do that too. But what's happening right now is not them saving you money. It's them costing you money because they're being lazy. So if you're going to go to any tax preparer, always come prepared with your itemizations. You feel free to give me a call. I'll walk you through that. You can look at a Schedule A online and look at the types of things that you should be collecting to make sure that you include that information to the best of your ability. It is always worth trying, though. So go prepared, go educated, ask those questions, and be insistent, because again, it might not help for the federal return, but often it does on the state return by hundreds of dollars. So there we go. All right, everybody. Next week, we're going to be talking about debt forgiveness. And I'm going to be talking about that from the forgiver side and the forgivee side. So the person who forgives the debt and the person who receives the forgiveness, there are tax implications on both ends there. So we're going to talk about that next week. In the meantime, take care. Feel free to reach out. Contact information is always on the back end. Take care.